All right, welcome everybody. How are you guys doing today? It's a gorgeous day outside, so thank you for spending your after lunch hour with us inside. Can everyone hear me through the microphone? Okay, and hello to our videocast audience. We are videocasting today's seminar, so we look forward and hope you guys will enjoy this. I just wanted to say something about our Focus on You Wellness Lecture Series. This is a series that happens once a month, and actually in June we're fortunate enough to have two seminars. June 22nd is our next seminar. And really the Focus on You Wellness Lecture Series is all about employee well-being at the NIH. And so we're focusing on a variety of aspects of wellness. Today is kind of not one of those typical things you think of when you think of wellness, financial wellness. A lot of times we have seminars on diet and nutrition, but one of the things we're recognizing is that there's really a thirst for all the different dimensions of wellness. And people want to know these things, especially in an economy like we have today, when financial things are on our minds constantly. And it's hard to keep that off your mind when we have so many things to be worried about. So hopefully some of your concerns or some of your questions will be answered today, and we really look forward to our speaker, Rosemary Hill. But before we start with the official seminar, I'm going to bring up Karen Leak from the NIH Federal Credit Union, and I just want to say thank you to the credit union for sponsoring today's seminar. Thank you.
Well, thank you for having us. We're very pleased to be here today because finances are very critical, particularly in these difficult economic times. And we want to make sure that everybody can learn as much as they can, particularly about the credit, because there's a lot of changing things going on with legislature and a lot of changing things with credit reporting. And we just want to make sure that you have the information you need. We have partnered with Money International years ago, and we've been very pleased to work with them. They have given a lot of seminars, and it has been very informative. And I'm very proud today to be able to introduce to you our presenter and speaker, Rosemary Hill from Money International. I hope you all enjoy this seminar. Thank you.
Thank you. Well, good afternoon. I'm so pleased that you decided to come inside and spend this hour with us. I know I walked over from the visitor center and I thought, gee, I could just keep walking, right? So we're going to talk about credit today, credit reports and credit scores. That's an exciting topic to me. It's one of my favorites to talk about. How many of you feel excited when you think about credit reports and credit scores? None of you enjoy that as much as I do? Oh, I love it, I love it, I love it. And just before I drove down, I talked to my daughter about credit. She was constantly quizzing me about it, and I was happy to say I was able to answer all of her questions. I hope that we'll be able to repeat that performance today. So as Karen said, she missed one of the words, but I forgive her for it. I actually work for Money Management International. We are a nonprofit organization, and we do education, we do credit counseling, and we do debt management. We have served the greater Washington, D.C. since 1973, and we work with NIH Federal Credit Union frequently to do these kinds of things, so I appreciate the invitation. If you have a question, by all means ask. I'm happy to answer it, okay? We're going to talk a little bit about what should be in your credit file, how to get a copy of your credit report. We're going to talk a little bit about reading it, disputing it. We're going to talk about credit scoring, and oftentimes that's where we get the bulk of our questions. So what is a credit score? How's it determined? The benefits, what's out there in the world of credit scoring, so you have some clues of what it is that you're buying when you get ready to buy, and how to maximize your credit score, okay? Are you more excited now? Oh, I see it in your faces. I'm overwhelmed. All right, credit. Credit reporting actually began after World War II. Prior to World War II, most people stayed pretty much in their local communities. After World War II, it's when we became a more mobile society. And I know my dad was in World War II, and up until that time, he lived on a small farm in Ohio. After World War II, he moved to Washington, D.C. In Washington, D.C., no one knew him. And so that really was the push to say, how well do these people do in their local communities? Do they pay their grocery bills on time? Do they pay other services on time? And so that's when credit reporting began, and it's kind of spiraled from that point. How many of you have looked at your credit reports recently? How many of you make it an annual habit? Good job. How many of you know your credit scores? I am impressed. And you're still not excited? All right. So credit. A credit report is how you have applied for, received, and repaid obligations in the past. What I like to use as a definition of credit is when you have the ability to use someone else's money. If you cannot use someone else's money, it's difficult to say that you have good credit. Does that make sense? If someone's not willing to let you use a credit card, if they are reducing credit limits, it could be indicative of credit issues. Not necessarily, and we're going to talk about that when we get to scores. But credit is really about using someone else's money. It's also about using someone else's goods or services. How many of you have tried to get a credit or a cell phone without a credit report? It's difficult to do. So it's also about trying to get utilities in your name, cell phones in your name. And oftentimes, we might think, I don't have any credit at all. I've never borrowed any money. I don't have a credit card. I don't have a cell phone. But it's possible that you may have a credit report for bills that have gone unpaid, especially medical bills. And we're going to address that too, okay? Where does the information come from? Most of what comes to the credit bureaus, and there are 3 separate credit bureaus, Equifax, Experian, and TransUnion. Creditors choose to report either to all 3 or to 1 or to 2. So the bulk of that information that the credit bureaus have on file about you comes from the creditors that you do business with. They download that information. It's uploaded by the credit bureau. It moves into your credit file. It is never verified. So whose responsibility is it to make sure that our credit reports are accurate? Ours, solely ours. They still estimate that about 75 to 80% of credit reports have errors in them. So it's our responsibility to make sure that what's there is correct. Some of it's going to come from you when you update an address or make some kind of change. Sometimes you may see an employer on your credit report, and that's oftentimes if you apply for a mortgage loan and they gather that information and it's transmitted. Public records. These are things such as bankruptcy, tax liens, child support issues, judgments. These are pretty detrimental to your credit score. Internal inquiries and external inquiries. And when we talk about scoring, we're going to talk about these. But this is who's looking at your credit and why are they looking. Collection accounts, that's when a bill goes unpaid and it moves into a collection status. And then lastly, consumer statements. You have the right to add a 100-word statement to your credit file. And this is a part of your credit so that when future creditors review your credit, they're aware that you've added a statement. It could be a statement about a disputed item. It could be a statement that explains why a payment was late. So you're saying, I'm being a little bit proactive here. I want to tell my side of the story up front and make it a part of my file. So you have that right. What's not in your credit is race, religion, medical history, political affiliation, checking or savings account information, criminal records, and anything else that's not credit related. When you use your Visa or MasterCard bank card, is that credit? Why isn't it credit? Yes.
Because it's your money. It's liquid money.
Exactly. It's your money. So banking information is not a part of your credit file. Sometimes, especially those that are just building credit, think that I have got this Visa or MasterCard that's tied to my checking account. When I go to the register, I say credit. And they believe that that may be reporting to the credit bureau, strengthening their credit history, when in fact it does not, because it's the use of your money. How are you going to get your credit reports? You have to tell them who you are, okay? So you need to know your name, your date of birth, your social security number. If you choose to go online to get your credit reports, if you've not lived at your current address for more than 2 years, you're going to have to list your previous address as well. So let's talk about going online, and let's talk about the website that you should use. How many of you know what website you should use if you choose to get a credit report online? Anyone want to tell me the name of it? That's a good guess. Thank you. That's another good guess. So I'm so glad I'm here. All right? The website to use, first of all, we have the right to look at our credit report once a year for free. So we have the right to pull an Experian credit report, an Equifax credit report, and a TransUnion credit report once a year for free. The website that was generated to help us accomplish that goal is annualcreditreport.com. Now you know it. Yeah. The other websites out there are owned by the credit bureaus directly. And in April of this year, April the 1st, freecreditreport.com actually had to add a disclosure up front about their site. Annualcreditreport.com was formed by the 3 credit bureaus. It is endorsed by the FTC. It is the site that the federal government encourages us to use. We can go there and pull that free credit report. It's not to say that we won't receive some solicitations from the credit bureaus directly, but it is the site that will allow us to achieve the goal. It will also monitor the last time that we were in, and so that if we visit in less than a year's time and ask for another credit report, it'll remind us that we've done that and we'll have to pay to retrieve another one. We can also call in, and some of us might still be a little bit old-fashioned and like to use the phone and not the internet. How many of you feel like that? Would rather just call? No old-fashioned folks, huh? I love to call. I just always call and get mine. And they'll drop it in the mail in about 72 hours, and it's formatted a little bit differently. Some people find it a little easier to read when it's mailed to them. You don't have to scroll as much, so your eyes, and I have aging eyes, your eyes can follow along a little bit better. You can also write, and we brought a little booklet along today that's going to give you all of this information, so when you go home tonight, you can get online or call and get those credit reports on the way. When you're on the website, they're going to ask who you are. They're going to ask addresses. If the address that you enter does not match what's on file, a form will come up and you'll have to write for your credit report. Once you get through that verification of address, they're going to ask you credit verification questions too. Please don't guess, answer correctly, and if you do, then they'll take you into your credit file. And you'll repeat this procedure for each of the credit bureaus, okay? Does anyone have a question about that? Nope? Okay.
So in this website, one can basically ask report from 3 different credit bureaus.
Yes, sir. Yep, 3. And if you'll just scroll to the bottom of this home page and seek that free credit report, you'll see a little link at the bottom of the home page in order to move forward. You'll repeat the same procedure. The entering of the information, the verification of the credit questions. If you're successful, then you can print. You can also go back in for 30 days and review. Yes?
Is the address used usually the one that's from your taxes or that your credit cards are registered to? That's a different address.
The one that creditors are reporting would be the one that I would use, not the one that I file taxes under.
Just
Yes.
a quick note. Can you please use your microphones when we're asking questions so the video folks could hear us? Thanks.
If you've already requested a free credit report from one of the other sites, does that include, or will that count against your annual one at this site?
It could, because they're coming directly from the credit bureaus, so you could incur a charge here. I can't say with all certainty. If you do, it's pretty minimal, the cost, and I say that it's maybe about $7. And just so you'll know, you can look at your credit reports as often as you wish to, incurring that fee, but it will never lower your credit score. Okay? But once you make this a part of your habit, if you use this site routinely, it'll clock it for you and you can remember. You can also do this quarterly, so pull one, next quarter pull another, next quarter pull the third. So you're looking throughout the year. You're not just seeing it all at one time. Another reason to pull our credit reports is to protect ourselves from identity theft. Most victims do not realize they were a victim of identity theft until they apply for credit. And that's when it becomes known to them. So this is one of the best defenses we have as well, to make sure that no one else is using our social.
So, but how do do you know that somebody has, we are victim of identity theft? How do you know? From the credit?
When you're looking at your credit history, you'll be able to identify accounts that are not yours. So when you begin to look at the credit report, you're first verifying name, social, date of birth, address is used, and then you're beginning to verify the trade lines. And we're going to look at a sample credit report. I believe it's on this slide, but if not, it is in the book. So you're going to look for trade lines, for accounts, and if you see something there that does not ring a bell with you, then you need to investigate it, and we'll talk about that, okay? When can credit be looked at? Employment. They estimate that 50% of employers today will view credit. You'll know that this is a possibility when you sign the application, the very bottom statement, the Privacy Act and disclosure. Many employers are looking at credit when they decide to promote from within as well. The IRS, if you owe the IRS and are asking for a repayment plan, they'll definitely pull your credit. Court orders and subpoenas are rare. Collection purposes are definitely, they'll look at credit. Licenses are, again, rare. Insurance, this is auto insurance and life insurance. They're going to review your credit. And then always the creditors that you do business with and future creditors. So whenever you're asking for the use of someone's money or the use of someone's goods or services, they're going to pull your credit report. If you're trying to rent an apartment, of course they're going to look at your credit report. So how many of you love surprises? Yeah? You hate a surprise when it comes to money, though, don't you? Unless it's good money, right? And you won some money. I have never won anything. All right. Credit reports. They're going to look a little differently, but basically they're going to tell you all the same kinds of things. And we went over this just a minute ago. Personal information, alerts, and validations. If you were a victim of identity theft, that alert would be listed there. Account information, collection account information, public records. Remember, these are the bankruptcies, the court judgments. These are the negative things. They may be listed first, they may be listed in the middle, they may be listed last, but they're going to be listed. Collection activity as well may be listed first, may be listed last, but it's going to be listed. Creditor information list and inquiries are usually listed very lastly. The creditor information list is an opportunity for you to come up with a phone number if you need to make a call to someone about something that's on your credit report.
Excuse me, can I ask a question?
Certainly.
What exactly is an inquiry?
An inquiry. We're going to talk about that when we get to scores.
Okay.
And we'll go over it in detail then. How credit reports are different, and this is important when it comes to your credit score. Not all creditors report to all three bureaus. Some creditors today still do not report to any credit bureau. So you could have a relationship with a creditor, a very favorable relationship, someone who's willing to let you use their money, but not see it on the credit report. As a result, it will not factor into your credit score. They call that non-traditional credit solely because it doesn't report to the credit bureaus. The timing, when credit is reported to the credit bureaus. Some creditors report every 30, some report at time of activity, some report every 60. Yes?
I'm curious, kind of as a fundamental question, what is the rationale for having three bureaus?
Competition.
Okay.
Yeah. Timing of updated information isn't always the same as well. The important thing about when information gets to the credit bureau, that information, when it hits, impacts your credit score. So as a result, our credit score is constantly changing. It can go up, it can go down, it can stay the same. But the good news in that is that if we're suffering with a low credit score and we're doing the right things, our credit score is going to rise. The bad news is if we do something that's not so swell, it's going to fall immediately. So that's really important. When you're going to look at your credit reports, review them for errors. This is really important. How many of you have ever tried to dispute something on your credit report? And how many of you like that process? Yeah? How many of you? We have an affirmative. Yeah. How many of you reached success by disputing? So how many of you believe that it was worth the time and energy, even though it was cumbersome? By all means, it's worth the time and energy. Credit can hang around for a long, long time. Ideally 7 years from the date of that last activity. If you're not active and proactive with your credit, things can haunt you for years to come. So it's really in your best interest to always dispute and try to get things as accurate and as correct as possible. Because all of those people are looking. And in this challenging time, credit is more critical than ever. How many of you have experienced some change by a major creditor recently? A reduction in credit limits, a change in interest rates. Anyone experience that? Yeah? How many of you appreciated that change? Yeah? Yeah. That's why I was talking to my daughter today, because she suffered a change by a creditor. So she wanted to try to understand the mindset of why that happened and what it did to her credit score as a result. So those are, oh my goodness. That was quick. I caught it. I'm good. All right. Retention standards. This is how long things stay, okay? Payment activity, inquiries, 2 years. So an inquiry is when someone looks at your credit. An internal inquiry is called a soft hit. It does not lower your credit score. An external inquiry is called a hard hit. It will lower your credit score. They will show on your credit report for 2 years, but they will weigh in your score for 1 year. When you pull your score yourself, you may see that inquiries are listed negatively, so you kind of have to take it with a grain of salt. They're going to show on your credit report for 2 years. They're only going to weigh against you for the 1. It's just indicative of how many people have been looking and when. Civil judgments, tax liens, 7 years from filing or until satisfied. These things have to be paid in full. Trade lines and closed accounts, typically 7 years from date of last activity. If you go all the way to the bottom, closed accounts is 10 years from the date last closed. How many of you have ever looked at your credit report, though, and seen things that were much older than 10 years? Do you know why that is? Because good credit is always good credit, all right? And after 10 years, there's not too many people watching the store anymore. So oftentimes you'll see it there for many years, for always, unless you dispute it. But remember, good credit is always good credit. It is the negative things that we want to drop off, okay? And so understanding when they should drop, and if they should drop and have not dropped, then disputing them for that statute of limitations. So you can say, this should have fallen. I need to dispute this item so that I can move forward with it not being a part of my credit file. The bankruptcies, you can see how long they'll be listed. Collection accounts, 7 years from delinquency. Foreclosure, unpaid tax liens, charged off accounts. Now, a charged off account is an account that was with an original creditor that was not paid as agreed. So I went to Sears. I bought a refrigerator. I did not make the payment for first month, 2 months, 3 months. Eventually, Sears will charge that debt off, typically at 180 days. Legally, I still owe the debt, but at that time, it may go out to third-party collection. It could be sold to a debt-collecting attorney. But ideally, I owe that debt, or that debt will appear 7 years from that time of charge-off. Okay? So understanding when that original debt went delinquent and how many years out from that date. Because charge-off debts can move from collection account to a collection company to a collection company. It can be really cumbersome to try to figure it out. Who's got my debt and what debt was it? I'm really confused. Another reason to look every year. The more you look, the more you know, the more you can remember, the more active you can be in making things right. Disputing. If you go online, they suggest now that if we dispute from annualcreditreport.com directly online, we're increasing the likelihood that our item will be successfully resolved. And they're stating that because they have a new way of handling the disputes that come through annual. We can dispute directly with the creditor. We can also dispute through the credit bureaus. If we get our credit report in the mail, they're going to send us a dispute form that we use. Keep copies of everything and never mail the original. Mail a copy of your proof. I paid my Sears bill in full. Here's a copy of the canceled check. You can always add the 100-word explanation as well if the dispute did not go the way that you had hoped it would. You can also contact the Federal Trade Commission. If you've never looked at the FTC's website, it's a wealth of information, so it's a good place to learn more. Does anyone have a question about disputing? Okay. We're going to get some excitement soon, okay? I know you're going to feel really excited when we start talking about scores. It's my favorite part. All right, I'm going to pass over that one for a minute. Credit scoring. Credit scoring is a digit number. It's from the FICO system and the Vantage system, it's a 3-digit number, okay? It is a number that the credit industry uses to assess the likelihood that you will repay the debt. The credit card industry, in addition to a credit score, also uses 8 other scores that we, a consumer, will never know. But the credit score is our right to know it. We do have to pay for it, and it's good, useful information. I think it's one of the most important things we can ever do. FICO is still the industry leader. How many of you have ever heard of a FICO score? How many of you have ever heard of Fair Isaac? Yeah? So Fair Isaac was the company that developed the scoring system. Mr. Fair and Mr. Isaac, a mathematician and an engineer, they developed the scoring system. They are a private company from the credit bureaus. The credit bureaus buy the scoring system from FICO, okay? It is still the most commonly used score. It's not to say that it is the only used score. FICO scores from 300 to 850. They do not assign a letter grade. 750 is considered an excellent score, okay? In today's economy, creditors love to see a score of 700 or higher. It's not to say that you can't get a good interest rate or credit with a lower score, but 750 is really still considered excellent. How many of you have looked at your FICO score recently? And did it tell you some positives and some negatives? And did you like those positives and negatives? Yeah, kind of, sort of. I pull credit scores quite frequently. And when we review the positives and the negatives, I always tell folks sometimes you have to take things with a grain of salt. Did your mom ever tell you that? Just kind of take it with a grain of salt. They're going to list things that may not make a lot of sense to you, or they may not seem so fair. So I'll give you an example. I pull credit scores once a month for a group, and sometimes people will come in, and when we look at the negatives, it will say you've only had credit for 5 years. Credit history is a part of your score. The next person will come in, and it will list a positive. You've had credit for 4 years. So do you see how we're kind of already in a contradictory state? So sometimes you just kind of have to take it with a grain of salt. It is what it is, and they're going to pick up always negatives. They're always hopefully going to pick up positives. If they're not picking up any positives, you got some work to do, okay? And I have seen scores where no positives are ever listed. And are those people a little bit depressed? They don't feel excitement like I do. Nope, they don't. All right. The other score that's out there is known as Vantage. How many of you have ever heard of a Vantage score? In 2006, Equifax, Experian, and TransUnion started the Vantage scoring system. Up until that time, FICO was all that there was. When they developed Vantage, FICO sued the 3 credit bureaus as a result. It took several years for them to settle, and they did settle with Equifax and TransUnion. Experian did not settle, and they took it all the way through the court system, okay? The reason I tell you this is because it's going to change what credit scores you can buy online and how you can buy them. Vantage scores from 501 to 990 and they give you a letter grade, A through F. How many of you remember letter grades from school? Did you like those Fs? Probably not a person in this room got one, did they? Yeah? So how many of you have ever pulled a credit score and gotten a letter grade with it, an A through an F? Then chances are you were pulling FICO, okay? It's important to understand what you're pulling because it is what you want that information for is really important to know. So if I'm going to go out and borrow money to buy a house, and if the lender is going to look at my FICO score, I don't want to buy my Vantage score. Does that make sense? I want to know my FICO score because Freddie Mac and Fannie Mae endorse the FICO scores. So chances are that's who the lender is going to be looking at, and that's the score that I want to buy. So understanding those differences is really important. So FICO is 300 to 850. Vantage is 501 to 990. They also assign a letter grade. Now I can go to the credit bureaus directly and buy a score. At Equifax and TransUnion, I can buy a FICO score or I can buy their version of Vantage. At Experian, I cannot buy a FICO score. What I'll buy there is what is called an educational version of FICO. So it's going to be their score. So it's going to be a little different, but nowhere can I buy an Experian FICO score online. You with me on that? The other place that I can go is to FICO directly. And I'll be buying a FICO score for Equifax and TransUnion. I will not be able to buy an Experian FICO score. Experian uses the FICO model and shares that score with creditors, but they will not share with FICO. You with me? And that's as a result of 2006. All right? Isn't that exciting stuff to know? Doesn't that empower you? Don't you feel more well as a result of this information? Okay, let's talk about what's in a score. All right? Most important thing we're going to do is pay on time. That's 35% of our score. If I have a score of 760, do I have a good, strong score? Okay. If I make one late payment, and this is a payment that's over 30 days, my score could drop by 100 points. So now I went from 760 to 660. That's the power of paying late. If my score is lower and I pay late, I'm not going to see that 100-point drop, but I will still see perhaps a 50-point drop. So if I were at 660, I'm now at 610. So paying on time is 35% of our score. 30% is called amounts owed. They also call this credit utilization. So what they take here is how much available credit do we have and how much do we owe. The rule today, for those of you who've seen the positives and negatives, when we used to pull credit scores, 50% of credit utilization wasn't a problem. And then it dropped to 30%. And today, they really want to see 10% or less. So if I have a $10,000 credit limit with my major credit card and I owe $9,000, I'm a tremendous risk. The likelihood that they may begin to reduce my credit limit is greater. And as a creditor reduces my credit limit, it can lower my score, okay? So ideally, what they'd like to see me owe is about $1,000. Yes?
One of the things I've observed is that as your credit card balance increases, they tend to increase your limit. Can you explain a little bit about that and whether or not that's customary?
If they're doing that, I would say it's a very favorable thing, okay? When a creditor is willing to raise a credit limit, they view you as a good risk. So chances are your score is strong. Your history is stable. Your relationship with them has been beneficial. Having said that, though, in today's environment, it's becoming much more common as our limits raise, our debt level raises, for limits to decrease. Even for those with strong credit scores. I did some work at another company, and a woman came in, and we were going to look at credit reports and scores that day, and her credit score was 818. Is that good?
Yes.
It's good. She had a credit card, a letter from her credit card company that she had had since 1991. Is that a long time? Strong relationship. This individual had little to no debt. And they recently changed her terms and conditions, and that's why they sent her the letter. And it really was upsetting to her. And so she wanted to talk about why they would do that. But generally, if a creditor raises a limit, it's not a negative thing. But today you'll see more and more probably lowering. Does that answer the question? Yeah. Yes.
So if you have a $10,000 credit limit and you're using $9,000, even if you're paying it off regularly, that's still negative? I mean, if you pay it off in full at the end of every month, that's still a negative thing?
No, that's a good thing.
Oh, okay.
The best thing to do is to use and pay in full. Remember what we said earlier, that when creditors report to the credit bureau, it will factor into that score on that date. So if they report the $9,000 balance and then the next day the money comes in, but they don't report that payment for how many other days, you'll see some variance in the score. So you'll see some movement up and down. Ideally, it's a good thing to use someone else's money and pay it in full. That's the best scenario. If we don't use credit regularly, we'll see a greater likelihood that they'll begin to lower credit limits. They may even close what they view as now a dormant account, and they get to define what dormancy is. We might see some adjustment in interest rates. We may begin to see annual fees on credit accounts that we've never had an annual fee in the past. So it's really important that we read what creditors send to us. It may come to us in the form of a separate mailing. It may come to us in the form of a little tissue paper that's stuck inside our statement. How many of you have ever gotten those? How many of you just take those out when they come in and get your glasses on and sit down and read? Yeah? How many of you just probably throw it or shred it or recycle it? It's oftentimes good information, and it's really the reason they send it to us. So credit utilization is an important part of our score. So we've got 65% of our score in 2 actions. The length of credit history is 15% of our score. This is how long have we had credit. Now, we can have credit, like I said, for 4 years and be listed as a negative, for 3 years and be listed as a positive. But at the end of the day, the best rule here is to stay with good, reputable creditors and go with them for the long haul. It's usually not to our benefit to do transfers and to do them frequently. And if we're going to do a balance transfer and leave a creditor that we've had for a long time, we may not necessarily want to close that account out. We want that relationship to still continue to report, and as a result, use it from time to time, because that factors into the 15%. The last 20% of our score is known as mix, which is new credit. This is when you're asking for the use of new credit is when you're asking for the use of someone's money. So if you go to the mall and they ask you to apply for a credit card and you use it to get the 10% off of whatever you purchase, that's new credit. It's an inquiry. As a rule, those inquiries can drop a score by about 5 points. Okay, that's a general rule. The rule here is if you don't need it, don't ask for it. And if you needed the 10% to buy the item, chances are you didn't need the item because you couldn't afford the item in the first place, right? So those are enticements. The last 10% is types of credit in use. Do you have a couple of pieces of credit, and how well are you managing? Those are the 5 things that drive a score. Vantage scores along the same lines. They score a little bit differently. They don't weigh quite as heavy on the credit history side. They believe that a Vantage score is more favorable to those that are new to credit or just developing credit than perhaps the FICO system may be. So do we have any questions about scores? You all are such a quiet bunch. No questions about scores? Yes.
I'm asking a lot of questions. Sorry, I'm really interested in this topic. Can you explain a little bit more about the dormant accounts and like, is it to your advantage to close out accounts you're not using or to keep them and not use them? What are the pros and cons to that?
As a general rule, we're better off leaving accounts open, even if they're things that we do not use. Having said that, major creditors, Visa and MasterCards, those are the creditors that are saying now, if you don't use this card for a period of time, we're going to close the account or we're going to begin to impose annual fees, so some kind of change in terms or conditions. As a general rule, though, if they factor in that credit history, they're looking for opening dates. So even if it's a card that we haven't used for a long, long time, they still may be pulling up that date and strengthening that part of our score. If we're going to close things down, we want to close them slowly. Now, previously, we haven't seen retail accounts making a lot of changes, but I have heard individuals saying that even retail cards are changing, and I know Target's making a big change and no longer issuing their Visa card. So, rule is, keep them open. If they're imposing an annual fee, or if they believe an account to be dormant, it could be 2 months, 3 months, 6 months, a year, they get to define dormancy. Read what it is that they're saying they're changing and make the decision then. If it is of no value to you, then close the card. If you get more than one, close them slowly. Okay? Ideally, we are serving ourselves possibly better having more than one major piece of credit, meaning one major credit card. Because if we receive a change in terms or conditions and it isn't something that we can accept, then we have somewhere else to go, some other account already established to use and make those things happen. Does that make sense? Did that answer your question? Okay. Any other questions about credit scoring? Yes.
It's a Macy, Sears, and Target credit card count for the scoring.
Say it again, I'm sorry.
I mean, the credit increase by using the Sears and the Macy card.
Yes, those are inquiries. So they will be an external hit or a hard hit when you apply for them. Once they're applied and issued, they no longer, they'll wait for 1 year and then those inquiries no longer factor into the score. They then become a part of the credit utilization. So the credit limits and the amounts owed then factor into the credit utilization, strengthening it or decreasing that part of the score if you owe debt. Did that answer the question?
Mm-hmm. If I frequently use that card, it's going to increase my credit scores. Right?
Yes, it can. Payment activity, constant use, that history, those are the things that strengthen credit scores. Debt does not strengthen a credit score, okay? It's not to say that it will hurt it tremendously, but ideally, owing as little as possible from an economic standpoint and a credit score standpoint is the best thing to do. So if I have $10,000, I'm owing $1,000 or less, or hopefully nothing at all. Did that answer the question?
Yeah. At the beginning, you said some money is yourself money, like MasterCard. Which kind of card is my own money?
Those are bank cards that your bank uses for you to access the monies that's in your checking account. It'll have a Visa or MasterCard logo on it. Those are the cards that the bank issues to totally allow you to access your account.
In that sense, if I don't have a bank account in the creditor.
You must have a credit card in order for activity to be issued or activity to report to the credit bureau. So you have to apply for the use of someone else's money. When that piece of credit is issued, they're saying to you, we're going to issue you this credit card, this piece of plastic. We're allowing you to access up to $5,000. You can use this card wherever you choose. We're going to send you a monthly statement and you must pay it as agreed. Those are the activities that report to the credit bureau. The bank credit card that my bank gives to me to access my bank account does not report to the credit bureau.
Yeah. For example, the Bank American, I have an account there. I have a card, it's Visa card, but also has a debit card in the same card.
Yes.
If I choose use a Visa,
It's still going from your account, the money that's on deposit, so it is not credit. Okay? Okay. Anyone else questions along those lines? Scores? All right.
I have a question.
Yes.
If you have limit, for example, Sears card that has limit of $10,000, then you're applying for a loan. You said if we don't owe, that keeps us in a better shape for the credit score. But if you apply for a loan, that limit counts as your debt. Is that true?
No, it does not. Some creditors would prefer that available credit not be there, but it is not debt, and it should not be held against you in that regard.
I was told so.
Yes.
That having too many credit cards,
Yes.
even though you don't owe them, that's kind of against you.
Yes. And you're not the only one that's experienced that. And I can't speak so I can only speak in general terms. Some creditors view open trade lines with available credit as the potential for debt. If they are closed, you're reducing the potential for debt. But when they're closed, you're also possibly impacting the credit score. So credit is the ability to use money. Debt is when you've used it up. So when you reduce the that credit limit, you're kind of cutting off the potential for debt, but at the same time it could lower the score. Sometimes when we apply for money, they don't take those factors into consideration. It's a comfort level from where they're at and what underwriting would like to see. Underwriting perhaps would like to see few trade lines that are open with available credit. So as a result, you shut them down. Does that answer the question?
Yes.
Yeah, it is. You're certainly not the only one that has experienced that, and we hear that quite frequently. Having that opportunity to look at your credit score before you ask for money is so critical. So you begin to understand what it is you've done well, where it is you need to improve, and how should creditors treat you as a result. And when you understand that, you're putting yourself in the position to have more dialogue with the creditor. This doesn't make sense to me. Can you explain to me why you've indicated I need to do this? If I choose to do this or don't do this, what would happen then as a result? So it's that dialogue that you're having, because you begin to understand your situation, and everyone's situation is going to be very personal to them, okay? But certainly I appreciate where you're at on that, most definitely. Any other questions on credit scores? Yes, sir?
Yeah. If I have 8,000 credit limit on the credit card, I use up all of them, but I pay monthly on time. Is that lower my credit score?
Ideally, if you're using and paying in full, you are adopting a very positive method. It's not to say, though, that depending on when the creditors report, that you may not see some change in score, but they can tell from history. Creditors who are looking, they can look at your history and recognize that that's your pattern. Using, paying in full, using, paying in full.
Not because I use all the credit limit. That's not lower my credit score.
Depends on when it hits. When that activity reports to the credit bureau, it may factor into your score at that time, but as soon as the payment comes in, it will reverse that. Okay. We're almost going to wrap it up here, okay? I'm going to see which direction. Credit scoring can increase the speed of credit decisions. We're seeing more and more, going back to the olden days. Any of you have ever bought a car where you had to put 20% down? Yeah? So, no? Yeah? We used to have to put 20% down when we bought a car. Hasn't been that way for a long, long time. not to say we're going back to that, but creditors are becoming more aware of situations. They're looking at people's capacity. Capacity is, can you afford this debt? And so we're seeing some changes there. It does allow the lender an unbiased decision-making tool, and it can give us the opportunity to use more credit and have more credit given to us. That's not necessarily a bad thing, okay? We talked about the FICO already. So we're going to pay payments on time every month. We're going to reduce the balances. We're going to keep them low. Ideally is the best situation. We're not going to ask for credit unless we need it. It's no sense to do it. We're not going to close unused accounts. We're going to look at our credit report every year, make sure it's accurate. And if you've had some problems, be patient. Time is sometimes your only friend in the world of credit. I'm going to wrap it up with that. Does anyone else have a question, concern? Yes.
So if you don't have a lot of lines of credit open, like if you've just got one, is it worth it to open another credit card to build the credit, even if that counts as a hard inquiry?
Yes, it may very well be a good decision because you're establishing another trade line. I would encourage everyone to deal with a reputable creditor. Someone that you know, someone that you can meet with on a regular basis if you need to, someone that may be brick and mortar, someone local to your community. You know, credit unions are a strong place to go because you're able to establish that relationship. Banks are a strong place to go because you're able to still establish that relationship. And have more than one trade line. Ideally, the safe place to be is 4. That's what they suggest as a good number, 4 trade lines. It doesn't mean that you can't have a strong credit score and have many trade lines, okay? You can.
Would a student loan count as a trade line?
Yes.
Okay.
Because that's part of the mix. The mix is revolving is credit card, installment is the student loan, the mortgage, the car loan. The student loan is a different piece of credit from the car loan, from the credit card, so it's the mix. And are we managing all of the mix? Okay? So look at your credit reports. Make it a part of your habit. The more you do it, the more you'll understand. Know your credit score. Spend a little bit of money and buy it. It's money well spent. And understand before you ask for money how people are going to look at you. Yes?
If I were to dispute something on the annual credit report website,
yes.
Does it go out to all 3 of them, or am I just disputing it with just the one? Does that website share the information and update it with all 3?
It may not. So if it's reporting to both, let's say you're disputing through TransUnion and Equifax has it, TransUnion will share with Equifax. If Equifax does not have it, then they will not. Okay. But what I would do to be safe is dispute across the board.
Okay.
Okay. And you could, yeah.
I have another question
Sure.
about the inquiries. Some of the inquiries on my credit report, I don't know where they came from. I know they have phone numbers. So can anyone look at it, or?
They have to have a permissible purpose. So it's the applying of credit, the trying to lease something. So if they have a phone number, that's unusual. And they may be a soft inquiry. You'll have to read the description, whether they're a soft inquiry or hard inquiry. If they're soft, they're not weighing against you. Creditors that we do business with are always going to look at our credit risk.
Every so often?
Yes, just to see how things are going in the household.
Okay.
And so sometimes when they get a sense that things are going better, they might change. Sometimes if they think things are going worse, they may change. So those are the soft inquiries.
Okay, thank you.
You're welcome. Anyone else? Well, I hope you leave here a little bit more excited than you came in, maybe, right? Hopefully this was good information.
Let's have a round of applause for Rosemary.
Thank
you so much. All right, well, thank you guys again for coming. Just be sure to mark your calendars for the next Focus on You Wellness Lecture Series, which is on June 22nd from 1 to 2 p.m. And I just want to thank Rosemary again, and thank you to the NIH Federal Credit Union, and also thanks to our planning committee, Laura Lavrin, Chris Gaines, and Michael Donovan. Thanks again for coming, everyone.
Thank you.